Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance. Here are your hosts, Lucas Muzialski and Leo Severino.
Hello and welcome to episode number 13 of the Wall Street Lab podcast. Today we talk about a topic that is near and dear to Luke's heart, actually, which is financial technology, more specifically, blockchain technology. As some of you will know, blockchain is a whole lot more than just cryptocurrency, and we spend a lot of time talking about that during this interview. And for that, we had the pleasure of interviewing Professor Dr. Philipp Sandner, who is one of the leading experts in blockchain technology here in Germany.
Dr. Sandner is the head of the Blockchain Center at the Frankfurt School of Finance and Management. He is also a part of the FinTechRat, a council of the Federal Ministry of Finance here in Germany. In our conversation, we touch on a lot of blockchain-related topics. We discuss different applications of this technology, as well as cryptocurrencies, smart contracts, and potential disruptions that the blockchain technology may bring in the future. If you enjoy the podcast, please show us some love and go to iTunes and leave us a review. It really helps us to grow this show. And now, without further ado, please enjoy our interview with Dr. Philipp Sandner. Hello and welcome. We are sitting here at Frankfurt School today with Professor Dr. Philipp Sandner, and we are about to talk about the blockchain. Hello, Philipp, and welcome to the Wall Street Lab. It's a pleasure to have you on the show.
Thanks.
Why don't we start off with the introduction to the blockchain? So for our listeners who maybe don't really realize or have not came across the term that's been actually running pretty hot in the industry recently, we'd love to start in the beginning. So if you were to explain in the simplest terms possible what blockchain technology is, maybe to quote a classic as if you were to speak to a Labrador or a golden retriever, if you like.
Yeah, I will try my best to make a golden retriever understand what a blockchain is. So it's not easy to really explain it because it's having many different facets. But the best way to explain it is, in my mind, the following. So imagine you are writing an email to a friend and you say, "Dear Robert, as discussed last week, please find attached $10. Best, Philipp." Yeah, so you're sending an email and you attach money, $20, $100, whatever. I think we all know that this is so far not possible. Now we cannot transfer money via an email except for the PayPal method. But this nicely shows what the blockchain technology aims to do and wants to do. The blockchain technology is there to transfer money via the internet, such that, for example, you can attach $20 to an email. Similar as we attach a PDF document or a JPEG document or whatever. And this also indicates what the blockchain technology is about at the core. The internet as we use it today is about transmitting information. So we are sending emails, we are sending JPEGs, we are sending PDF documents around via email. But so far we cannot send value around. And with the blockchain technology, you would be able to send value around. And this also means that you can send value around because the sender and the recipient is having a specific address, something like an email address. And if people are now starting to send value around between each other from one address to another address, then you easily see that suddenly you don't need the banks anymore for transmitting value because it's going direct from me to another person via various internet nodes, but it's not going through the ledger of a bank anymore. And this also indicates why there is such a hype around it, because it induces many chances but also many risks, because various processes or value chains might change or can change potentially. I'm not saying that it gets that way or it will exactly going in this direction, but the potential is there and that direction is also there, and this makes it so extremely fascinating. And now think, if we are able to transfer value from one person to another person, like an email, then you could also imagine that the recipient or the sender is not a human being, but a machine. So I can transfer money to a machine, or a machine transfers money to a human being, or most importantly, a machine can transfer money to another machine. And that's then the area of Internet of Things payments, where all kinds of devices out there will be connected to the internet. It can be a light bulb, it can be a machine, it can be a storage, it can be any kind of things. And with blockchain technology, these devices can then hold value like a wallet and can start transferring money to each other. So do we need this? At the outset, you would say no. But if you dig further into it, then it suddenly starts making sense. If you, for example, having a toll station and a truck drives by, then you might want the truck to transfer a specific amount of money to the toll station. And you also might want to have it dynamically dependent on the demand or supply of traffic out there. And this then all becomes very much IT intense, and it starts becoming or making sense for IoT payments. The next point also is, if you are able to send information from one person to another person, like I've explained just now, then you could also send money around the entire globe without any transaction costs. So I can send money, for example, to a school in India, or to another manager in Australia, or to anybody around the world without any, or with hardly any transaction cost, directly from my pocket to another person's pockets. And this then also provides another huge possibilities. For example, charity organizations might also need to rethink how they are working. And now the last thing is, which makes it extremely powerful. We so far just talked about payment, but it's not just that payment needs to be transferred between two participants of the network. You can also transfer other things which can have value. It can be US dollar, yes, it can be Bitcoin, it can be another cryptocurrency, but it can also be anything else which has a value. Potentially, it can be a stock being transferred via the internet. It can be something like reputation or something like identity, which you can transmit through the internet. And most important, the transfer of money, for example, does not need to happen instantly. So far, we had the example that I'm sending money and the recipient receives money like a few seconds or minutes afterwards, right? But with blockchain technology, and that's then now the next stage, which is currently being developed, you could also make payments depending, or you can make transactions dependent on specific conditions. So if you have a condition like something depending on the weather, yeah, so imagine the following situation: $20 are being transferred once it rained for 2 weeks. That's nothing else than an insurance for farmers, which might to redeem some money in case the weather is not suiting their crops well.
That sounds like a future of options trading.
Exactly. That's exactly now the next example. If you now say the payment is being done dependent on time, then that's nothing else than an option or a forward or a construct like this. If you say the payment is being done only if I agree on it and two other people are agreeing on it, then it's nothing else than either a consortium credit or some kind of escrow process. And this way, if you can now put everything on a blockchain, not just the payment itself, but also the condition when this transaction will automatically happen, then this provides really huge possibilities if you combine it, not just with financial markets, but if you start combining it with Internet of Things, machinery, mobility, energy markets, and so on, because this then all gets started to be integrated.
So I could, for example, combine the blockchain algorithm that is an option payout with, for example, a weather service that says if it's been raining, and then automatically redeem my option. Is this something that could happen? Yeah,
basically, yes. And that's basically what people say. This is a smart contract. So it's a few lines of codes. You execute or you deploy this kind of code on the blockchain. It's there and it just sits there and waits until the conditions are true. And then this kind of process is automatically executed. So you don't need a lawyer anymore. You don't need an accountant anymore. It's just executed once the conditions are met. The problem now is, and I think we come to this in a second, is so why are we not using all this? Because the key point is that it's of course regulated. That makes it difficult for startups. And secondly, the problem is also that you need to be on the blockchain to benefit from all this. And so far, getting into the blockchain ecosystem is partly not an easy endeavor, because you need to exchange money to a cryptocurrency to really get into the system. And this is so far not very convenient because it's a very, very early state of this technology. And therefore, these entry and exit points into the blockchain world, they currently make adoption a little bit difficult because it's not as easy as wiring money to somebody else. You need to first exchange money, for example, to Bitcoin, and then you can do things with it.
So we've talked a bit about the possible applications of blockchain. What is the technology that you are currently most excited about in relation to blockchain?
The blockchain technology is rooted in the Bitcoin application. So Bitcoin is, you could say, some kind of digital currency, and blockchain is emerging from this early application. Bitcoin has been drafted as a concept in 2008, and it has then been implemented in a first software prototype in 2009, and since then it's running and it hasn't been hacked. The entry points and the exit points, that's the exchanges where you exchange, for example, euro to Bitcoin. These entry and exit points, they have been hacked, yes, but the blockchain itself, which is storing the transactions, has not been hacked. So that's really fascinating as it is now, because the system is operating without anybody really owning it and controlling it. The system operates now since nearly 10 years. That's fascinating. And now people have started to add this additional layer of smart contracts, which in my mind is really fascinating. And the most fascinating implementation of this kind of approach is done by Ethereum. It's a public blockchain. Everybody can go there and buy this kind of currency. It's called Ether. And the price of one Ether is currently, $78 US. And everybody can participate in it. It's a public job blockchain, and it's out there everywhere. It's in Australia, it's in Europe, it's in Peru, it's in Indonesia, it's everywhere. And this makes it something like an operating system for business processes where people can join this ecosystem and build their own processes or even startups on this specific blockchain implementation. It all sounds great, and actually, in my mind, it is great, but adoption is still very low, and it's still in a very, very early state.
You mentioned that the blockchain technology has not yet been hacked, and I would like to come back to that in a moment, but maybe we could go back a little bit and go back to the basics, and maybe you could tell us, why is it actually called a blockchain?
Well, it's called blockchain because, literally spoken, it's a chain of blocks which is happening. And actually, it's something like a way for storing data, and in this case, transactions are being stored on the blockchain. And what the critical point now about a chain of blocks is that in each block you have transactions coming in from the network. So if I want to transfer money to another person, then I basically send this transaction to the Bitcoin network. It's being processed there. This means that the transaction is being broadcasted to all nodes within the network, and the nodes are collecting all these transactions. At the same time, these nodes participating in the networks, they are also participating in some kind of puzzle, all at the same time. And if one node is solving the puzzle, then it fetches all transactions which have been collected until that time, since the last puzzle has been solved. And these transactions then are packaged into one block. And this block is then being somehow closed and broadcasted through the entire network of nodes. The other nodes are then validating if this block which has been generated, if this is a valid block. And if they say so that this block is valid, then they start puzzling again. And all transactions as of this time are then newly connected until the next puzzle has been solved. So you then see that the transactions which are coming in, they are kind of blocked. And each time a new block is being done is basically the same time when one puzzle has been solved. And that's why it's a chain of blocks. And you need this chain of blocks because otherwise you cannot make the network of nodes being in sync, because all nodes participating in the Bitcoin network, they always need to share the same truth, and therefore they always need to revert back to the latest possibility when they all have found a common truth. That's called consensus. And this is basically the last block appended to this more or less endless chain of blocks.
So now we're talking about a peer-to-peer network on which this is taking place. And we're getting into the topic of the public ledger. Would that be fair to say?
Mm-hmm.
Maybe you could tell our listeners a bit about the public ledger and what it implies.
Yeah, the public ledger then is nothing else than having access to this blockchain. If we talk about the Bitcoin network, this means that you can access all transactions and you can have a look who transferred money to whom and when and what amount. These transactions, as explained earlier, they are packaged in blocks such that the chain of blocks emerges. But again, the ledger indicates that all transactions having been happened in the Bitcoin network are recorded, and they are time-stamped so that they are occurring in one specific order. And this then allows people to have a look at which address is sending money, which address is receiving money, what is the amount being transferred, and so on.
In a world run by blockchain, is there any privacy left for a consumer, for a person who, if we assume that we purchase things using blockchain technologies and cryptocurrencies, who has access to this public ledger? Is it everyone, or is it just the institution running the ledger?
Mm-hmm. There are 3 points which are important here. First of all, we have these blockchains like Bitcoin, Ethereum, and other blockchains. They are so-called public. Everybody can access them. But on the other hand side, you can also design blockchains in a way such that they are private, for example, for only one organization or only one company. And you can also make blockchains in a way such that they are permissioned, such that only specific people have access to write or read from them. So it's not just that every blockchain needs to be public. There are various configurations out there. Concerning the privacy, it really matters what you are storing on the blockchain. With the Bitcoin blockchain, what is stored there are basically number accounts. So it's like in Switzerland, you have many accounts with numbers, but you don't know who is owning which number. So it's some kind of anonymity. Then the second point to consider is that it really matters what you are storing on the blockchain. In the Bitcoin network, it works like numbered bank accounts. So you have a number which is holding money, which you can see, but you cannot see who is it. So there are no addresses, no email addresses, no names stored, but just numbers or codes. And therefore, it is anonymous as long as you do not know who is owning which number. And the third point is, in the Bitcoin blockchain, you see what is being transferred, so the amount of Bitcoins, so you see the value there. But you could also have a different configuration of a blockchain where, for example, you either see clear names or no names, or you see the clear volume of transaction or the amount of the transaction, or this has also been obfuscated. So there are various possibilities on how to configure a blockchain, and that's very important, because a blockchain is not one construct which you just deploy and you then have it, but instead it's more like a technique of storing transactions, which is getting more and more differentiated as time is passing. And therefore you have all kinds of configurations on how to really configure a blockchain so that it fits your needs. You can restrict access, you can open access, you can make it anonymous, you can make it clear, you can do all kinds of things as you want to have it.
You mentioned 2 different types of blockchains, and I would like to follow up on this a little bit. Public and private. Do you feel that one of these is going to take over the majority of transactions or operations that are being done on the blockchain technologies? Or is this more a matter of different applications of these 2 types of blockchains?
You can't really say that one of these possibilities of implementation are really taking over, because they will just have different ways of how you would them to be applied. So public blockchains make sense in a specific way. private blockchains make sense in another way, and both make sense just in a different context. It's like a database. So you have a few database models out there. You can configure them in any kind of possibilities. And sometimes you want to have it this way. Sometimes you want to have it else. And there are just many different possibilities. And there is no standard which is applied everywhere.
We're talking about Bitcoin and cryptocurrencies. How do you feel about Bitcoin being the biggest digital currency? Do you think that it is the last digital currency to be sort of accepted by the public? Because we've seen thousands of digital currencies coming up. Some of them didn't do so well, some of them did okay, but Bitcoin is definitely standing out. It's been very volatile, and it's been discouraging consumers from purchasing it and using it for payments. What are your thoughts on the topic?
The most important point here is that it's just a very, very, very early technology. And so far, when I memorize it correctly, today, all cryptocurrencies added together have a market capitalization of around 38 billion US dollar. That's as of today. Bitcoin alone has a market capitalization of 23 billion US dollar, so it makes up 2/3 of the entire cryptocurrency space. So the question now is it much or is it low? And I think here we need to really define what kind of perspective we are taking on this thing. Yeah, it's not entirely clear what it is. It's questionable if it's a currency or not. But if you take the currency perspective, then of course, $23 billion are not very much. It's close to zero. But if you have another perspective, namely the one of a startup, of some kind of people having an idea, putting this idea to life and just wait and see and what happens, then 23 billion is massive. So it really depends on the perspective. And therefore, just as one comparison, so if you add up all market capitalizations of all cryptocurrencies out there, then you end up with a market capitalization of around 38 billion US dollar. And that's exactly as much as the market capitalization of Deutsche Bank. And so now the perspective is always, is it now a currency? Is it a company? Is it a startup? But Bitcoin has so far setting the right incentives, but it doesn't have any employees. It's an automated system running by 6,000 computer nodes, and it has a market capitalization like Deutsche Bank. So from my perspective, that's definitely significant. And therefore, I think the point is which perspective you are taking on. Then the second largest cryptocurrency is Ethereum, and this has a market capitalization of around 7 billion US dollar. So the question now is, yes, is it much or is it low? It's not that much from a currency perspective, but it's also significantly more than zero. And the question now is just what is happening with regards to adoption and diffusion. In my mind, you see a clear trend that diffusion is growing, but at a low pace. And I would not say that Bitcoin is once for all the largest blockchain or public blockchain out there, but it just has been the earliest one. It hasn't been hacked. It's out there since the beginning, and therefore it has some kind of advantage over the other ones. Within the world of cryptocurrencies, you can say that the Bitcoin is basically the greenback within the system. So many trades between these single cryptocurrencies are being executed with Bitcoin as a backing. So Bitcoin is something like the entry currency. And this also makes it quite important.
When we're talking about currencies, we can't miss the topic of the backing for these currencies. As we know how the US currency developed, first being backed up by gold, then guaranteed by the government. Bitcoin is just there. What's the argument that it's worth something? It's worth something as long as people think it is. But how do you think it would perform in a crisis?
Actually, we don't know how we should really view this, because the point is here that Bitcoin is definitely made as a scarce asset, limited to 21 million coins. And this is also hard-coded into the program's code. So there is no possibility to have an inflation out there. So 21 million is the limit of coins out there. But still, if people don't believe in it, the value is still close to zero. So I think it has two dimensions. One is the scarcity of assets, which is programmed into the code. And the other thing is the belief that people are starting to believe that there is something in it, that it can be some kind of storage of value. But it's also the belief. And belief is very close to a self-fulfilling prophecy. And I think therefore it's difficult to really say what is it exactly, because it's made up of beliefs. And currently also partly because of the hype, people are believing that there is something in it, that it is a storage of value, and that makes it at least a small currency yielding 23 billion US dollar. And concerning a crisis, what can be a crisis? There have been multiple crises out there. So, for example, there have been various versions or conflicts with regard to versions, which approach to future development to follow. This induced some uncertainty, and uncertainty immediately led to a drop in the price. But so far, Bitcoin has recovered, and therefore, to some degree, it has dealt with this kind of crisis. Other crises out there were induced by hackers, which hacked the entry points, the exchanges. I think this is also a point which is kind of natural, unfortunately, but it's also a way that Bitcoin has kind of survived these hacking attacks, and therefore I think there will be more crises like that, and therefore I don't think that Bitcoin will have a problem surviving here. The price will just fluctuate up and down.
You mentioned the hackability of cryptocurrencies. Is there a possibility that a currency like Bitcoin gets hacked?
Well, there's always the possibility that a software is hacked. We know from our day-to-day usage of computers that software is not perfect. And therefore, the point is the more complex software is getting, the more likely it is that you find some kind of possibility to hack the software. But concerning the Bitcoin blockchain, you can be sure that at a capitalization of 23 billion US dollar, people have really tried it now for years to hack it, and they didn't succeed. Otherwise, it wouldn't be at this market capitalization. But you can also be sure that future versions of other cryptocurrencies might be more complex, might have a weaker community such that some kind of errors are occurrent, and then you would have the possibility that such a thing would be hacked, definitely. And concerning the smart contracts, which we have discussed previously, you can now, if you start implementing computer code on a blockchain basis, then of course you can always create errors within this kind of code, and then you might induce errors on your own. So therefore, there is always the possibility that there might be leakages or problems, but so far at least the backbone of the Bitcoin blockchain proves to be quite secure. But you're mentioning an interesting point, because concerning these smart contracts, it's not just that they are lines, 3-4 lines of codes. They can also be quite complex programs, such that you are having autonomous organizations which are more or less living automatically on the blockchain. There are already a few of them out there. There are even constructs like funds out there which have been implemented on the blockchain. One of the biggest funds out there raised 160 million US dollar, which is quite much. It has been the largest crowdfunding and happened last year. And here you might have problems that in the computer code there might be some kind of issues or problems. And therefore I could imagine that lawyers and auditors will have a switching role profile, because in the future their task could also be to basically validate and approve these kind of smart contracts being deployed to a blockchain.
Regarding the smart contracts, it really sounds like this kind of technology would bite into any kind of intermediary in the market, and probably not only financial markets, but any sort of digital market where trust is needed. As you mentioned, escrow accounts, would they be required after implementation of technology like blockchain, where contracts are deployed automatically?
It's good that you're mentioning this. Blockchain at the end is about trust, and the technology of blockchain is created in a way such that we can trust this technology. And because we can trust this technology, we do not need any intermediaries anymore, because in our current world, these intermediaries would provide the trust. So in the blockchain world, you can trust the technology. It's made in a way that you can trust it. People have inspected it. They have seen the code because it's open source. Therefore, you can really trust the architecture and this entire software. And this allows us to put business processes and real value on the blockchain. And therefore, intermediaries might need it to adjust their business model, because, as you said, escrow agents and so on, they might not be needed in the future, but that's actually, in my mind, the long-term future. You will always need specific intermediaries out there, because you somehow also need to ensure that the entry points into a blockchain world are pure. So the intermediaries and their business model, they will need it to adjust, but they will always be needed, definitely. The interesting point is what you also mentioned, is that it's not just about financial intermediaries. It can also be intermediaries like charity organizations. That's nothing else than a trust party. We are trusting this organization such that my money is going somewhere else and the money really arrives there. But you can also have intermediaries, for example, in the energy market. So utility companies are also to some degree intermediaries, because they are there to take up energy and deliver it to the customers. And with a blockchain approach, you can also try to revolutionize energy markets, which would also adjust the business models of the utility companies. So this means the electricity we are consuming here might not be delivered by the main grid, but it might be delivered by the neighbored houses, by the solar panels there. And then you just need to have a local market clearing mechanism for finding a price between supply and demand, but you do not necessarily need the energy utility companies therefore anymore.
That's actually great. You just answered my next question about how these businesses should adjust to the new circumstances in the market. We're talking about businesses and how they should adjust. Maybe we should mention people. So if we think about young professionals now who are working in one of these fields, maybe it's some kind of brokerage, some kind of financial intermediary, how would a person prepare for arrival of this technology to make sure that their career stays on track? What should they learn? Is there a specific programming language that you would prefer to implement blockchain technology over others, or how would you go about this?
Yeah, that's also a very interesting question. I think young people, or people now being educated or wanting to change their education, they should go for IT in any way. Whatever they would like to do, there needs to be IT involved. And I can also imagine that, for example, people in the financial area, they might see specific problems in their job profile, because a lot of tasks will be getting automized in the next 5 to 10 years. And what I just explained about the blockchain technology with its smart contracts is at least to some degree integrating the law department and the accounting department to really automate everything. It can be a fund being automated, it can be fundraising being automated, the processes itself can be automated, and this also means that you don't need specific tasks anymore in the accounting or in the law department. You will always need people who can do accounting, you will always need lawyers, but their job profile will adjust. And it will be more about the conceptual part of the work which is needed, but not anymore the routine stuff. This will, in my mind, be entirely being automated. And therefore, I think people, especially in areas like finance, they have two possibilities. Either go purely in the conceptual way for thinking about concepts which machines cannot imagine, or go in the IT area and try to participate and shape this kind of world, which will definitely happen in the next 5 to 10 years.
In terms of potential regulatory future implementations, what do you see as the main trend happening here? Because this technology will change the way how banks operate. It will change how intermediaries operate, maybe entire financial markets. This will need a lot of regulation from the side of the government. And as we know, governments usually are more reactive than predictive in their behavior. How do you feel the regulation will change in terms of the blockchain technology and banks?
One important point I would like to mention before I really answer the question: blockchain as it is now cannot revolutionize payments and capital markets overnight, because the technology is so far in an early stage. It's too slow, performance is not high enough, and at the same time we are having, at least within a country or within Europe, we're having a highly efficient payment system. Blockchain cannot take it up with this. So therefore you do have fascinating applications of technology, of blockchain technology out there, but it's definitely not the within one country payment markets and not the within one country financial markets. It's more about niches like cross-border payments or micro payments and the other use cases which we have explained previously, but it's not about from today to tomorrow revolutionizing capital markets. But it might change in the next 5 to 10 years. But for the short term or midterm, I think blockchain will not be integrated in capital markets. Now, concerning the questions regarding regulators, it's also a varying field, because you can see specific countries which are quite open to this new technology, but you can also see other countries which are quite closed concerning this technology. Some years ago, the countries and regulators didn't really want to see this technology. Then there was a lot of opinion against Bitcoin, of course, due to various reasons. And nowadays it's happening in a way that it's quite nuanced, quite differing what's happening. For example, you see Japan accepting Bitcoin as a currency, so you can now pay widely in Japan with Bitcoin. And then you have countries like Germany where there is some kind of legal ground, but it's not a currency. Then you see countries like Russia. They have been quite closed for a long time and are now opening up their perspective concerning this technology. And then you have even countries like Switzerland, which are trying to use this technology and the regulation for it to provide, for example, certainty for startups, such that the startups should all move to Switzerland. You see this happening from time to time, because more and more startups are moving to Switzerland, because the Swiss regulative bodies, they are trying a quite open approach, and they are trying to basically deal with this kind of innovation, which makes people moving there. And therefore, you see here now that regulation might be used or maybe even misused as an instrument for making politics. You see this happening to some degree. In Germany, it seems to be a quite clear statement that Bitcoin is not a currency, but still it has some kind of legal ground. So there is some kind of certainty provided here. But still we see that the Swiss regulatory bodies are more open and more constructive in discussions also with startups. They sit down with startups and find out how can we deal with this technology. And for me, what I've heard, that the Swiss regulatory bodies, they are really trying to also understand the technologies, not just by lectures, reading and so on, but also by sitting down with startups to really understand what's going on in the space, because this entire space is developing so extremely quickly.
Yeah, I actually really like that idea of politics competing for talent, because I think countries are more and more realizing that they are really in this connected world, that they are really in competition. If someone doesn't like the law in the UK, they'll move to Switzerland to start a company. So they are competing on the political level as much as on the business level.
And one point to add on that, it's not just about Europe. You see a lot of blockchain activities in Asia, which is really massive. And there you see countries like Japan, China and Korea and Singapore, which are leading the space. And also interesting, you see that Dubai wants to play a major role in the blockchain area. So if we talk about blockchain, we shouldn't just talk about Germany and Switzerland, and also not just about the UK and the US, and also not just about the Silicon Valley, but we really need to look what people in Asia are doing, because there is extremely much happening and there is a high dynamic in the market there.
Why don't we jump into a more technical theme. I bet our math savvy listeners and tech geeks will much appreciate a short explanation on the blockchain technology itself, how the peer-to-peer network actually works. Maybe there is some details that you would like to share with us about this.
Well, it's difficult to make it just via audio, because it would be nice to have the possibility to paint some sketches, but I can at least try. So as I explained previously, let's do it with an example of the Bitcoin network and a Bitcoin transaction. So you have the Bitcoin network out there. It's consisting currently of around 6,700 nodes distributed all over the world, mainly in China and Iceland. And they are in one network and they are listening to transactions. So if I'm now sending a transaction, meaning that I want to transfer money from my account to another account, then these computing nodes are listening and they are just collecting the transactions which are coming in. At the same time, as I explained previously, they are doing a puzzle. And this puzzle is meant in a way that it's so difficult that you cannot solve it immediately. You need to have time to really redo this puzzle and redo it such that by statistical probability, the puzzle will probably being solved around 10 minutes after you have started to puzzle. And puzzling in this terms means that you are having specific computers out there. It has been graphical units for processing images previously, but nowadays you have specific computer chips which are doing nothing else than computing this puzzle. And these computers are puzzling. Why are they doing it? Because in case they are solving the puzzle, they are getting a reward. And the reward is a specific amount of bitcoins. That's why they are doing this puzzle. And once that the puzzle has been solved, then they are sending the solution to this puzzle around in the network. They are broadcasting the block of transactions which they have compiled and the solution for this specific puzzle. And then the other nodes in the network, they are receiving this kind of solution together with the block of transactions. And then they are immediately checking if the solution is true. And that's one of the key aspects in the blockchain area, where it's about building this consensus within the network. It's about that it takes a long time to solve the puzzle. So that's 10 minutes on average by thousands of computers, but it only takes milliseconds to prove an existing solution to the puzzle. So it's asymmetric. And here you then see that the solution which one computer has been found is broadcasted through the entire network. The other computers are checking it. They are checking if it's true. And thereby they are now establishing the new truth, the new ledger as of this point in time, all at the same time. And that's basically how this network is then coming to one shared truth. That's called consensus, because each part of the network is checking the solution. Then, and that's important, then this block of transactions is appended to the chain of blocks which has existed earlier. And then the puzzle starts all over again. Then, for example, the nodes are once again listening to all transactions coming in, and maybe then another node in the network is solving the puzzle, and then it starts all over. This means that the network, at least in the Bitcoin architecture, is reaching a consensus for what is the truth. It reaches a consensus every 10 minutes, and then it starts all over with collecting transactions and trying to solve the puzzle.
I remember reading a very interesting article about Bitcoin farms, where the price of Bitcoin actually determines if it's worth the money to run these farms in terms of cost of electricity. It was pretty fascinating. Also, depending on which chips you're using for farming the Bitcoins, it's really a new world out there.
Yeah, it's a crazy new industry which is emerging there, which is just about finding sources for cheap energy and having access to the most efficient computer chips, because then you are just be able to puzzle faster and then your rewards are higher. Yeah. But we should never forget, this is the extreme case of a public blockchain like Bitcoin, which is operating without any central entity, but it's an extreme case. So there are hundreds of other approaches for blockchains out there which are also operating but do not have this kind of extreme case where you have so many computing nodes participating and which, for example, also consume that much energy. It's just one specific configuration, and therefore we should never put blockchain and Bitcoin together in one word. It's something different, but one is building on the other.
As we examine the architectural structure of blockchain technology, we find out that it consists out of many pieces, including software engineering, game theory, cryptography, and a lot of other data science layers. And if we look at those, where do you think there is most place for research to be done in terms of discovering new technologies?
I think there are two main streams here. The one stream which is important is finding out when does it make sense to apply a blockchain approach, what are interesting use cases out there. We've discussed some of them, for example, micropayment and so on. And the other larger stream of where research is needed is basically concerning the performance, such that you have a higher throughput concerning transactions.
So, a silly question. Where are Bitcoin databases stored? As we mentioned, it's a peer-to-peer network. And my understanding as a person new to this yet familiar with technology, if I assume that every single transaction is recorded in the public ledger, the ledger becomes larger and larger. Would the storage of this ledger, as it's being copied constantly, would the storage of this ledger become problematic at one point?
Yeah, basically, yes, definitely. So currently it has a size of 110 gigabytes, so that's quite huge. And it's stored on each of the participating 6,700 nodes. So it's a database there. But you can't really look into the data because you can only access your own account when you have your own key to access it. So it can lie there, but you can only access the data with your own key. And now concerning your question, would then the database increase? Yes, it's increasing, but at the same time, the computer code running the Bitcoin nodes, this is also being changed from time to time. So you have a community out there of people who are maintaining the code, and they also see that the network is growing, and therefore they are proposing software updates from time to time. And then it's their task to propose an update. And if those people running the computer nodes, if they like this update, then the majority will win. This means that once more than like a significant share of people have installed this new software on the computing nodes, then you have an updated Bitcoin software, and then the network could have new features. And people are currently working on new features such that this problem of disk space might go down, or such that you have quicker payments, not just every 10 minutes and so on. So there are various ideas for updates underway. It just needs some time until they have been accepted by many people and they have a quality such that everybody would accept them.
Perfect. Is there anything that you would like to leave our audience with today?
One important point is, once again, the question, why does it take so long for this technology to be adopted? And I think there are two relevant points here. First of all, blockchain is nearly always about running some kind of infrastructure. It's an infrastructure for payment, or an infrastructure for energy, or an infrastructure for mobility, or something like this. And the infrastructure is typically in the hands of larger organizations, which are running the infrastructure rather efficiently. So these larger organizations, they will not exchange their infrastructure from today until tomorrow. And therefore it takes some time until these infrastructure applications might be exchanged by blockchain approaches. This will take years. This explains partly why it takes so long until we see blockchain applications out there with a wide usage. And at the same time, because it's mostly infrastructure related, startups have problems because nobody lets a startup having access to an infrastructure which is critical. So you see startups out there, but very often you could also argue that these startups are doing nice ideas, but they can't be really big because they don't have access to the infrastructure. And this is exactly the point where the cryptocurrencies are coming into the place, because that's a little bit like the Wild West. You just create a new cryptocurrency, you just create a new blockchain, and you're just building something without needing the access to infrastructure because it's a green field and you're just exploring an entirely new business model. And therefore, blockchain can be used partly as a means to increasing the efficiency of processes or the transparency concerning information, but you can also use blockchains for entirely new business model. And depending on how you apply it, you are then, for example, in the area of cryptocurrencies, or you are in the area of larger organizations maintaining the infrastructure. And therefore you see a fascinating dynamic in the area of cryptocurrencies, but you do not see that many widespread applications with regard to the existing infrastructure. But I'm sure that this will change, but it will take some more time.
Great. Is there a place where people can find you online and more about your research, your work, and what you do?
Yeah, we are running the Frankfurt School Blockchain Center here, and you can have a look at what we are doing at fs-blockchain.de.
Great. Thank you so much for the interview. It was a pleasure.
Thanks.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
The information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. Any copying, distribution, or reproduction of this podcast without the permission of the creators of the podcast is strictly prohibited.